Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. This edition of the Moving Iron Podcast is brought to you by John Deere. I've got Greg Machinery, Pete Peterson on to talk about what's happening in the world of auctions and equipment. Greg, how you doing today?
I'm doing well, Casey. Just trying to stay cool here. How are things down your way?
That's a full-time job this last couple of weeks, man. Trying to stay cool. It's been really, really hot.
Losing battle.
Yeah. And it's I don't think you're going to win anytime soon. Looking at the forecast, it's supposed to be hot for a while.
No, you can hear the corn growing up here, literally in Minnesota. It's humid.
Mm-hmm. Yeah. I don't mind the heat so much. It's the humidity that comes along with that always gets me. So.
Yeah, you're Western Nebraska, pretty dry heat out there.
Yeah. It's a dry heat.
It used to be more dry, but last number of years, Minnesota tends to be warm and sticky. I tell people, to me, I'm an old guy. It feels like southern Minnesota is what I used to remember northern Missouri being like, but it is what it is.
Yeah, you kind of stuck with what you got now. Sounds like
Yep.
So, but even out in my neck of the woods, it's even more. It's more humid now than it was when I first moved out there. So just all the fun stuff that comes along with planting corn closer to town, I think does a lot to the humidity in the air, I think. So.
Well, we sound like a couple regular old grouchy old guys, Casey. I don't mean to recruit you into the grouchy old man club.
We just need a cup of coffee and be down at the local gas station. It would be fitting right in.
I was just at an auction Monday, and it was the biggest in-person event I've been to in a long time on the auction front. And we got laughing as talking to so many people about, we need these in-person auctions. The world has a lot of problems. We got to talk these things out and solve them.
You got to solve them.
They were serving beer at the auction, so that always helps. We pretty much got it all figured out.
Yeah, that's the I miss the online auctions, or not online, the in-person auctions a lot. I love going to auctions and sitting there what's happening. But let's talk a little bit about some of the auctions that you've been following here this week. You talked about this one that you're at this week, cattle country up there in that way. You had some wheel loaders, some feed trucks, balers, those kind of things. How'd that sale turn out, Greg, compared to?
Yeah, it was gangbuster sale, Casey. It was Monday, July 14th, Mandan, North Dakota. It was the sale for Freddie Berger, kind of a legendary cattle guy, rodeo guy too, actually. And his brother, people know his brother, Chuck, of course, world-renowned bull riding rodeo guys there. But Freddie was only 67 and a massive operation. And Ulmer Auction did the sale out of Ashley, North Dakota. And I got to spend some time with Brent and Derek and the crew. They're great auction company, really on the move, growing fast. And Brent was telling me they actually spent 7 full weeks up there prepping for this sale. So it was unusual in that, it was in person. It was a humongous crowd because everybody knew and loved Freddie. But then you go down the line and they had over 10 Bobcat skid steers. They got 12 UTVs. They had, oh my gosh, they had a row of wheel loaders that was just incredible. I think Freddie might have formerly been involved with the Hyundai dealership. I heard anyway. And then feed trucks, wow, incredible. The one that got me was, I think it was a 23 model Pete 537 with a Sioux automation 4600 box on it, only like 2,300 miles on it. So we knew it was going to be high, and I think it came in with the online bidding fee. It was like $181,475. I had a little chance to talk to Brent Ulmer during the sale. He had his dad popping behind the mic there, spelling him a little bit, but pretty much across the board, everything was very strong. We were saying it was the Freddie Premium. But again, like we talked about on some past episodes, Casey, when you have a particularly farm auction like this, I mean, you can't blow smoke and make stuff up, but it was readily apparent that Freddie had connections all over and was really well thought of. And his equipment was well cared for. So the hay equipment, the loader tractors, I mean, it was a very strong sale. It was fun to be there.
Yep. So I've been watching loader tractors here sell late and kind of getting some data on them because they're very stagnant for where the cattle market's at right now. They're very stagnant in sales the last quarter of 24 and the first half of 25, but it feels like that kind of flipped a little bit, and you're starting to see some more of that data come through. You were talking about a sell you saw this week where you saw some loader tractors sell.
Yeah, it's interesting when it comes to trends with the new sales. Of course, I keep an eye on that. I have for years, and sometimes there's lags, and sometimes they go step together. But good used loader tractors have been just blazing hot at auction, and I stumble over all the examples because they'll come at me from all directions. So Saturday, out in I think it was Rogers, Ohio. My friends at Kiko Auctioneers had a sale. It was a very small sale. A guy he's like a 50-acre farm, probably involved in some other things. A beautiful farm there. Equipment, very, very low use. So he had a 23 model 6120M Deere with, I think it was a 600R loader. Only had 65 hours on it. So 2 years old. It's like new. So it's going to be high, but it brought 122.5. So if you machinerypete.com, you look in the auction prices, the previous high was 120. So again, $2,500 over. You also had a 23 model 6140M. Now that one did not have a loader, but a lot of them we see do. 252 hours went for 112.5, second highest auction price ever without a loader. So again, that was off a little sale in Ohio, kind of the northeast area there. I think Rogers.
Was it loader ready, Pete?
What's that?
Was that tractor loader ready?
I believe so. Yeah. And also some good hay equipment. They had a John Deere 630 disc bind, 17.5. I thought that was pretty decent. But yeah, it's interesting if the new sales aren't flying off the dealer. Again, I know what I see on the auction market. It's very competitive. It was also on the sale Monday in Mandan. Freddie had a 13 model John Deere 6170R with a loader. Now it had almost 5,100 hours on it. But here again, it's not just the crazy low-hour ones, Casey, we're seeing strength. So this one brought 92.5, which, when again, you pull our data apart, if you isolate 6170Rs with loaders over 5,000 hours, that is the fourth highest. And the only three higher were from that period of like late 22, which of course was kind of the top of the market, into early 23. So again, like I say, there's so many examples all over the place.
Yeah. That is that 5,000 hour loader tractor is one of those ones that's the I kind of look at that as that's the high end of the premium tractor, where as far as like when you're looking for that budget tractor for the hours, like you're trying to stick for under $100,000, but not under $85,000. That's kind of where that 5,000 hour loader tractor's fallen in here of late, and it feels like that is really getting stronger right there than we've seen. I think more than I've seen solidify in other areas, where you start seeing, like, you go look at like a high horsepower row crop tractor, something like that. That 5,000 hour tractor is another popular tractor in that 3,500 to 5,000 hour range, but it doesn't feel like it's as solid of a footing as you're seeing in the loader tractors.
Right. I mean, I remember back in 21 and 2 when we'd see higher horse tractors, if they were good condition with higher hours. Of course, everything was on fire then because the inventory was so tight.
Right.
But you're right, that's backed off. So it's in that lower range used tractors, and of course, the same thing apply. I mean, I stood at that it was 96 degrees in Mandan on Monday, and I'm a Norwegian boy, so I was kind of melting, but so much fun. But I can't even count, Casey, how many times we'd watch an item sell. It didn't matter what it was, a wheel loader, or a hay baler, a skid steer. And people would go, oh, that sold really well. It was a little higher than I thought. And then people say, well, what's the new one cost?
Right.
And it's all about levels, like we talked about. So people, whether it's 5,000 hour mark or staying under 100K, if it's good condition like Freddie's stuff was, or the Kiko sale, it's really interesting. Sales of new aren't flying, but good condition used is very strong in this sector.
Yeah. And you start looking at the overall amount of equipment that's actually on out there for sale, listing stuff, machinerypete.com, those kind of things. Start looking at where those things are at. You're seeing a trend line down, right? So you're seeing tractors starting to trend line down. You're seeing planters trend line down, sprayers trend line down, but you're seeing combines only one that have a little peak up. But you would expect that this time of year because you're going to see a lot of those machines that are coming in for fall harvest. They're starting to kind of trickle their way through here, so you're starting to see that.
Yeah.
You expect a seasonal peak a little bit, but for the most part, it feels like inventory is contracting as far as the amount of inventory out there.
It's better, yeah, definitely better than it was a year ago, no doubt. And
Yeah.
again, our dealer friends, I'm sure, and we're starting to see some sales now. This has become really a pattern. It didn't used to be like this. I thought, I've been doing it 35 years, tracking the auction market, but again, we've talked about it, but that buoy in the water June 1st,
Right.
where dealers across the northern half of the U.S. go, okay, our seeds in the ground. Let's catch our breath. How are we sitting for inventory? And then you start to see in July the sales, whatever inventory they want to push out. So, for example, July 23rd, as we're talking, it's a week from today, I think. McDougall, great auction company up out of course, they're across Canada, but I think this one's in Regina, Saskatchewan, I think. I think it's Regina. But it's like 29 combines. So you start to see. And then it's always interesting to me to see what is the inventory made up of? Is it 23? It was huge combines. 24, we started to see high horse tractors, still combines, like say planters, sprayers, and compared to last year, we haven't seen as much hit yet in July. Starting to see a few more, but but the loader tractors, we don't see as many of them on those dealer auctions, and when they do show up, they're just holding better than the high horse tractors right now.
Yeah, for sure. And you would typically expect to see this time of year, especially, more of a foothold on the row crop tractor side of it than you would see on the loader tractor side of it, because typically all the loader tractors right now are out being hooked to a baler someplace doing work, and you wouldn't see that turning of equipment till after hay season, basically September through the end of the year, and then going in pre hay season in January, February, March timeframe. So it's interesting to watch how that trend line's kind of flipping around a little bit.
Yeah. Well, I was out in cattle country Monday, so that's why I wanted to go, just to watch everything sell, but also get the vibe from people. And so that was really interesting to talk to folks from all over. I think on the grain side, we understand the pressure with commodity prices in terms of softer new sales, and like we've been talking about, expected downward pressure in some of the auction pricing. Again, I did hear this yesterday or Monday, probably half a dozen conversations. Pete, I think we're going to see more farm auctions coming into the year. And to me, that's a reflection of this. It's starting to be now an extended period of pressure. I talked to a number of lenders Monday from across the area, so that was interesting. But yeah, I think that belt tightening mentality on the grain side that guys have had to be in there is still at work. And you and I track not just the auction prices and the volume of dealer listings, but of course also we track search traffic, right, which is very telling. To me, it's much more telling than like a sentiment survey, which those are great. But 10 o'clock, what are you doing? Are you looking for equipment or are you not?
Yep.
And we see when that goes up and down. And so that's, it's really, really, I think it'll be a very fascinating end of 25.
Oh, I think so too.
The used equipment market. Could be more auctions.
Yep.
Will dealers feel okay to push more into them? I don't know. What are you thinking?
Well, I think I've been saying it since the end of 24 going into 25 that the last half of 2025 we're going to start seeing some more movement in the marketplace, which we've been seeing, and I think that last quarter of the year, especially October, November, December timeframe, that last quarter, and especially in that latter half of November, I really feel like you're going to start seeing a lot more movement that really carries over into 26. Now, that being said, we got to see some movement on some commodity prices here towards the end of the year. Where you've got a $3 in front of $4 or $3 moniker in front of corn the other day. So we're kind of going to get over that hump a little bit. But there's a lot of stuff out there talking about some pollination issues. Had Chip Nellinger be on here in a little bit. He was talking something about pollination issues and those kind of things, and you're starting to see a lot of heat in the forecast during prime pollination period for corn. So there's going to be some weather premium stuff to come in there. So hopefully guys can take advantage of that. But I look at the last half of 25 going into 26 to be a very I think it's going to be a very explosive is not the right word, but it's going to be
Volatile.
There's the word I'm looking for. Like, you're going to see a lot more movement than what you've seen in the past, and I think that's going to be
On that topic of volatility, and to me, volatility always coincides with opportunity. Now,
correct.
obviously, if you're on the wrong end, volatility will hit you like a hammer and take you out of the game, which is no good. But I do have to share, Casey. Monday, I was standing there. I met an 83-year-old gentleman from I'm trying to remember the town near Wishick, North Dakota, and had a great time visiting. And he had told me in 1986 he purchased some land just outside of his hometown there, farm ground, and he said he paid $375 an acre for it. Now, 1986, I mean, my dad always told me 1985 was the belly of the beast from the dealer side, just trying to frickin' survive. And of course, egg farm, everyone was just trying to survive. But one thing I've always talked about over the years is if you're able, through decades of planning and hard work and saving and such, that really the opportunities are so striking in these down periods. And later that auction, I ran into his son and his grandson. And his son told me about the 2 tractors he purchased in 1999. And I went, oh, well, that was a really good time to buy, because auction prices coming off 96 it tanked. They're terrible.
They were bad. That was a bad time.
If you could buy a 3 to 5, 6-year-old combine, the value you got there was, and I said, you did what your dad did. And then that guy's 16-year-old son was standing there, and his name was Carter, bright young guy. And I said, Carter, you have unbelievable examples in your father and grandfather here in terms of being aggressive when other people are understandably tightening the belt.
Sure.
Well, if the number of auctions goes up at the end of the year, like there's some speculation, how will values be affected? We'll see. But I think it goes back to that word we just arrived on, volatile. It's going to be interesting.
Yep. When you're talking to the bankers and stuff like that, talking about end of the year stuff, what was the sentiment you're getting from the lenders you were talking to?
It's a split. It's to me, it sort of mirrors our culture, oddly. I mean, it's kind of haves and have-nots, and a lot of it just depends on your age, how long you've been in it. But if you're my age and older, that's most of farm country, from a percentage standpoint, through the good years, you did really well. You can weather these storms. Now they're stretching out longer, which is of course no fun on the grain side, but so they're okay. But we're starting to hear more of like, well, maybe now, maybe end of 25, maybe I will have a sale. Just not as fun, basically. Then on the younger side, or when you're building your operation in the growth phase, if you hit a patch like this, it's just unfortunate timing, and that's difficult. So when I talk to lenders, there's more pressure there. So people come up to me and they'll say, Pete, that particular sales said it was a retirement sale, and I know where they're going. And it's like, yeah, you can call things whatever you want, but it was forced. And we are seeing more of that, and it's no fun to see it. But it's an unusual period, because usually when you hit that in my 3.5 decades doing this, you don't have this split so much where there's money, and land values are really let's look at that as the canary in the coal mine.
Yeah.
Those 3 guys, the grandpa, the son, and the grandson, I talked to them for a half hour at the sale, ducking out of the sun into the shade. And they were like, Pete, these land values, they are not going down. And we don't think they're going to go down. Yeah. And you might say, well, why haven't they gone down? And, I'm no expert. I haven't spent my time analyzing land and stuff, but there's just strong balance sheets, right?
Yeah.
And that's why, again, when the right kind of used equipment shows up, like Freddy's on Monday, whether it's livestock related or even grain stuff, we talked about that 9770 last week that brought 187.5, and people go, wow. And it's like, well, it was as nice as you're going to find, and it was Bob's or it was John's, it was Casey's, it was the premium. So you swirl all this up, and that's why it's so interesting in 25 here just to track these different trends.
For sure. And I think that's what we're going to see a lot of this at the end of the year. Excuse me, at the end of the year, we see a lot more of this. What's that going to look like? And I feel like there is an extreme example of pressured auctions, just like you talked about. I think that will continue to grow. I don't think we'll see those kind of things happening, but I'm not so much concerned about the farm sales that affecting the prices. I am, the consignment side of the auction price really contracting the value of auctions values out there.
Yeah, I don't think, if we see an increase in the number of farm auctions, you're right, I don't foresee it to the level of like, oh my God, we got triple the number of farm auctions, so it's going to knock down values, but it will be a noticeable bump. You're right. What we saw last year in 24, end of 23, even on the dealer side, dealers like, wow, aggressively addressing their inventory situation. And that did, that supply and demand economics 101. Yeah, that knocked the prices down, no question. So again, I'm just fascinated right now to look compared to a year ago where the supply side is on all these categories that we track at machineryrepeat.com versus a year ago. They're not fixed. They're just better positioned.
Right.
So as a dealer, then I think, hopefully guys and gals, it gives you more options. Well, okay, let's be aggressive with this stuff at auction, but hold back with this stuff.
Yeah.
And then, I mean, the real interesting thing, and we've done it a few times, Casey, is you start to walk out ahead of what's over the rainbow, because farming is brutal. I mean, nobody knows what corn and beans are going to do, right?
Right.
But you can track what's happening with inventory.
Sure.
And we've been watching that, and you can track what's happening at the top, at the manufacturer level.
Yep.
So we've talked, the concern there about whenever there is a spark on corn and beans, my concern is that it's going to be kind of a barricade, and everyone's going to want to do whatever at the same time. And, there's going to be a quota, and you get into that environment, and that's a wonderful thing if you're a manufacturer, because whatever your price point is, just keep jacking it because I have it.
Yep. And I think that's the same thing we saw happen in 2009, going into 2010 timeframe, coming out of the Great Recession. Everyone shut down. Commodity prices really spiked up, started that spike up to $8 corn, we saw in 2012, and made that run. And that's what happened. A lot of people were, hey, we need to upgrade our tractor. Hey, we got a tax problem, this, that, and other thing. And next thing you know, they didn't have the capabilities to even put an order in to get it in 2010 or 2000. They had to wait till 11 or 12 to get that stuff come in. So your choice was late model, low hour, or whatever bucket you're fishing in at the time.
That's why when I was talking to the grandson or the grandpa, son, and grandson, and Carter's a 16-year-old kid. It was one of those kids, Casey, that gives you hope for the future because he looks you in the eye and he listened and he'd ask, he's just a sharp kid, hard worker. But it's like these are the cycles you talk about. And if you can at all help not being behind that 8 ball when everyone is getting the same thing, that's if you can do it. So again, his dad and his grandpa did it on the land side and the tractor side in 99. And again, I just told Carter, be a sponge, man. You've got great examples here. And machine repeat theory of opposites. I feel when I talk to the Wall Street crowd, Casey, it's funny. When times are roaring, like in 21 and 2, I'm like you're on the dealer side. Then we're like, uh-oh, look what's building up. Well, this is going to be bad. So everything's roaring and you're going, uh-oh, there's a stoplight here. Now it's flipped. And now like sales of newer are low, but I'm sitting here saying the opposite, like, whoa, whenever that spark goes, poof, this is going to be wild. So it feels kind of funny, but I think farmers get that, and they understand that theory of opposites and how, again, if you can hit it the right way, man, you're making your fortune.
For sure. For sure. All right, Greg, probably a good place to stop. Just want to remind everybody, had Alex Kerr on last week talking about the sale he has coming up with machinery management services. Basically, it's a unique sale. I'm looking forward to see how it goes for him, but it's an export-focused auction, so it'll be interesting to watch how that plays out for him. But that is August 14th, if I'm not mistaken, and that'll be up there. You guys check that out at Kerr Auctions, so make sure you check that out. And Greg, where are you traveling? You got any travels coming up next week?
Well, you brought up our friend Alex Kerr and Gina, his wife. They're fantastic. That's our next auction. We're filming for the show down in Mount Sterling, Illinois. I'll be down there the 28th. And by the way, if you've never been to a Kerr auction, you got to go. And go early and go have dinner. Alex and Gina put on just an amazing event. I think Ty Morgan's going to be there. We'll be there. Then the auction is the 29th, so we'll be down there filming for the TV show. And then Casey, you're coming my way, Rochester, August 21st. 21st for Yield Academy on the tail end of crop tour. So looking forward to that. Should be great fun.
Yeah, it'll be a good time. We're going to have a little opportunity to do this recording live in front of some people, and then we're going to do some Q&A and stuff like that. And then you and I have some breakouts. They're going to trust us not to spoil too many minds while we're up there and people. But
we'll have two. Well, again, I'm not calling you a cranky old guy yet. I don't want to see you tilt that way. I'm not trying to influence you, but no, that's great fun. I love Q&A. I don't know if they're serving beer. That I can't remember, but I always found the Q&As get more interesting when there's beer flowing. But we'll see.
That's for sure. Also, we have the Moving Iron Summit coming up in Austin, Texas. That would be September 24th through 26th. So if you're a dealer, you want to check that out, make sure you come and check that out. We got a lot of good stuff, a lot of data stuff, a lot of used equipment talk, those kind of things. So it'll be a great place to be at. And if you're interested in doing that, just go to the events page on AgWeb, and they'll get you. You can have all the information there. So, well, any last thoughts, Greg, you want to throw out there before we close it down?
I think I'm still trying to re-get my brain going from Monday standing in that heat. So I think I'm tapped out, Casey.
Okay. All right. Right on. Okay. Well, Greg, appreciate you being on the podcast. We'll catch you again next week.
Sounds great, Casey. Have a good one.
All right. Stay tuned for more Moving Iron podcasts after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a deer.
All right, welcome back to Moving Iron Podcast Markets. I got Chip Nellinger from Blue Reef Agri-Marketing on to talk about what's happening in the world of commodities. Chip, how you doing today?
Hey, doing well, Casey. Trying to brave this heat. It's great for corn plants, but big Clydesdales like you and I, it's not so fun to be outside, right?
It's not. No, I'm in Kansas City this week, so it's there's a fair amount of heat and humidity where I'm at right now too, and I forget what it's like to live in this kind of stuff. So it's a little bit on the miserable side, I think, is the best way to put it.
Yeah, for sure. But there's been plenty of rain up to this point, so that's been a good thing and fairly bearish for the markets. But if you look at this extended forecast, there's a bunch of serious heat in it, so that's causing a little bit of a bounce like we're seeing, off the recent lows here in the corn and the bean markets. But next 6, 7, 8 weeks here is going to be all about the weather, and so that's going to be front and center. And obviously, these weather models change on a dime, but right now, there's some of the biggest heat that we've had so far this summer, and we've had some heat up to this point too. So we're talking about some serious heat coming into right in the heart of the Corn Belt, and we'll just have to see how long that lasts and how much rain is behind it. That's really going to kind of ultimately be, I think, the biggest factor in these grain markets over the next 2 or 3 weeks.
Yep. All right, let's talk about the grain markets here. Let's jump into corn. Corn has flirted back and forth on both sides of $4 here the last 10, 15 days. We're seeing a nice bounce this morning. We're up around that 406 mark. Kind of get some of that stuff that you alluded to already about heat and stuff. But I guess you talked a little bit about a pollination issue before we started recording. That's reared its ugly head here.
Yeah, that might be some of what's at work here too, Casey. I mean, this market, remember, it's a futures market, right? And so
Right.
It's factoring in not what the weather we just had, which was really beneficial rainfall. Now they're looking out ahead. And so just over this past weekend, there started to be some, stuff floating around on X. We actually have a couple customers across the Corn Belt. The first one that kind of contacted us was in kind of north central Missouri. There seems to be a pollination issue out there in corn. It's unrelated to weather, it seems. It's more of a breeding issue in these plants and certain hybrids. It's not one company specific, and it seems to be a problem out there. Just how big of a problem, no one knows yet. That's what is yet to be seen. But that on top of this heat that's in the forecast, I think went a long way towards kind of refocusing people and saying, hey, we were talking about some yield forecasts of, 184, 185. There was one that was up near 187. That might be just a little bit premature. This crop is not in the bin yet. If we have some pollination issues out there, if we're going through a bunch of heat at grain fill, that can change, those numbers really quickly. And I think that caused some short covering to kind of get back north of this 4.25 area on December corn. I'm not saying we've got to go screaming back to 475, 480 overnight, but get it back into the 430s. You're probably right in the middle of that range again, keeping everybody on their toes and waiting for more information on, okay, how did pollination go and how is grain fill weather going to be in August? Are we going to struggle with heat, or is this a temporary, ridge that's setting up and we're going to go back to cooler, wetter conditions? So a lot of questions out there, Casey, with, maybe being just a little bit premature, counting a, record corn crop by several bushels that's, harvested it in the bin. We're far from that point.
Yeah. The record amount of the trend line yield that they're talking about is, I talked about that trend line yield for the last, I guess, ever since you and I have been doing this, they've been talking about trend line yield, and they always come up 5 to 6 bushels short, it seems like every year, it feels like. But as you're looking at that trend line right now, if you were to put that in, if that happens with corn where it's at right now, where are we looking at here, Chip, if we see this really turn around to be a massive crop that we keep talking about hearing?
Yeah, I think that's a great question, and you never know the exact answer to that. So trend line, let's review that. Trend line's 181, right? We've never done that. And that is the actual trend line yield, the math of it. Remember, the biggest crop we ever raised was last year at like 179.6 or 7. So certainly possible to hit trend line. If it is just trend line, when I say just trend line, that's still a massive crop at 181 bushels. I think you can make an argument that down there near $4, the low that we scored last week, might be about as low as you need to go. We've got a really good demand base built up. The thing about that report, the WASDE report last Friday, that was a little bit overshadowed because all this rain was coming over this past weekend, was the fact that world carryout was, on the low end of it, not only the low end of expectations, below the lowest estimate. And so it's not like the world is just awash in corn right now. So I think if it's trend line, if it's 181, probably an argument that we don't have to get much below $4 on December futures, and have a chance to probably get back north of 450 for some sort of a post-harvest bounce. The flip side of that, though, is if it is as big as what some of these private estimates have put out there, if it's 185, 186, 187, that's where some problems come. That's going to be some logistical issues at fall. We've got a lot of storage out there that we've built, on farm the last 5 to 10 years, but it's going to tax the system if it's that big, and $4 won't catch it on the downside. We'd likely have to spend some time, maybe down 380s, maybe an argument that you could get into the 370s for some sort of a harvest low. So, that's what the market's going to be fighting out here, probably until October or beyond, is how big is big. And, we've got to finish this crop still. We have a heck of a start, arguably probably the best start we've had if you take into account the Western Corn Belt, even in spite of some problems here in the Eastern Corn Belt. But we're only about halfway there. We got to fill this crop out and finish and, beat an early frost. And, there's a lot of hurdles we need to jump over before we can count trend line or higher yields out here this year.
Yeah, we still have to get across the Continental Divide before winter, right? And that's where we're at, right? So there's a lot of stuff ahead of us here for sure. For sure. All right, let's talk about soybeans real quick. We've seen a 50-cent runoff of soybeans since the first of the month. Looking at soybeans right now, soybean meal, those kind of things. Where are you at on that, Chip? What do you see happen there?
Yeah, same thing there, right? We've got no trade deal with China as of yet. The window's probably almost closed as far as getting a deal done that would include soybeans during our normal window at harvest. So that's been a little bit of a bearish headwind. Obviously, tremendous rains around the Corn Belt here the last couple of weeks. That's a bearish influence as well. But yet, everybody knows the bean crop's made in August, right? And you've got this big high pressure ridge sitting out there. It's dead center. Pick St. Louis, Missouri, essentially, and go a couple 200-300 miles east and west of there, and that's the bullseye of this heat, is where it looks like on the current forecast. And so that's caused some short covering. Also, soy oil is threatening to break out again to the upside. We had that big run about 3-4 weeks ago in soy oil because of the release of those EPA, biodiesel mandates. That was very friendly. The soy oil market probably got a little bit of ahead of itself and put a correction in. It's flirting with trying to break out of a trend line to the top side. We traded above it yesterday. We're a little bit higher in the overnight. I think soy oil could be something that drags beans along for the ride. And obviously the uncertainty of this heat going into August is a question as well. Again, is it temporary and that ridge moves and then we get cooler temperatures with a bunch of rain in August? Or is that thing going to set up and we're going to struggle with heat for the rest of August? Lot of later beans out there, a lot of beans that need every day of the season. And August is going to be the key to that. So that uncertainty, I think, is causing this little bounce. It's good to see. Keeping everybody on their toes, flipping a coin here on betting on Mother Nature, which is always, 50-50 at best. And, a little bit of strength in soy oil, and it can really change the name of the game quickly in this type of market environment.
Yep, for sure. I want to just kind of bring this up real quick. If you take a look at the current droughts map, if you're looking at it, you look at the majority of Illinois is still is in some level of drought, whether that's modest to abnormally dry. But if you get down South Illinois, you start seeing some normal conditions. Same way with Ohio and Indiana. Northern Indiana, you see some areas up there. Ohio's in good shape. Basically, eastern and western Illinois or Iowa are in a similar condition. But you start looking at like Nebraska, and Nebraska, for the most part, the whole state is in some level of drought. The further west you go, the worse it gets, Chip. And so looking at that drought monitor right now, the heat comes in that you're talking about, would you start to expect to see maybe some more weather premium get built into that just because of where current drought situations are?
Yeah, for sure. And some of those dry areas that you mentioned, I would say probably the northern half of Illinois has been, the epicenter of that drought. In fact, over the 4th of July weekend and leading up to that, around here, the yards were kind of burning up and, nobody was mowing and you could see it. Corn was rolling and stressing. And then we've had some tremendous rain right on time. So, to your point, there's not a lot of subsoil moisture out there necessarily, but over the last 10 days, 2 weeks here, I guess since the 4th of July, there have been some tremendous rains in almost all those areas you mentioned to kind of get us a little further down the road. I know there's portions, and not everywhere, there's still pockets that have missed, right? I'm not saying that there's not pockets here and there that have been shortchanged on the moisture, but For example, here in Northern Illinois, couldn't have been better timing with, right at the early stages of pollination. Over this past weekend, we got 2 big doses of rain, probably 2.5 inches on the low side of that. A lot of people got 3+, some 4+ inches in 2 doses, over a couple of days. So you almost couldn't write a better weather scenario right now. Now that's today, right? We're going to need some follow-up rains, especially if this heat comes. There's not like a big subsoil reserve there that we can draw on a lot of those areas. So it's going to be critical that we get some follow-up rains, at least a couple good rains in August to fill, this crop out in corn and to, kind of get beans to the finish line as well. So I think to your point, that's why we're seeing this rally off the lows. It's been kind of sharp. It's been, a little bit surprising because Monday afternoon's crop conditions showed an improvement of like 4% in beans. Corn was unchanged at 74%, but that's one of the highest rated corn crops for this point in time in history, one of the top 3 or 4, I believe. So, there's almost only one way to go with that. And I think that's why maybe the market is sitting there thinking, we got a little bit of ahead of ourselves here with trading beans under $10 and, corn down near $4, under $4 in the September contract for a period of time. Maybe that's a little bit premature because we still have about 6 weeks of weather here that, we need to kind of get accomplished in some rainfall before we can start talking about, yes, these are record crops in north of trendline yields.
Yeah. Okay. Let's bounce over, talk a little bit about what's happening in the cattle space. Saw the border get closed again for some disease issues and those kind of things. You saw all-time record highs again hit. We've talked about this for a long time, that the last couple of years that just about when you think things are going to start ratcheting back down, they go back up. So I guess when you're looking at that, Chip, what do you see happening in the cattle market right now?
Yeah, it's like a broken record, Casey. This is one of the longest lasting bull markets, really of any markets in history. You're working on arguably the 3rd year here. And so that border being closed again, it's been on again, off again, on again, off again. I think now this is, by my count, the 3rd time it's been closed. Screwworms moving further and further north. I think the USDA said, hey, we're not seeing what we need out of Mexico. Well, let's close this border again. It's probably not going to be reopened anytime soon. This is probably a longer term fix that we're looking at. That shot feeder cattle into new highs. At the same time, you're seeing, multi-year lows in corn prices. So it was almost a perfect storm for feeder cattle. Shot feeder cattle into new all-time highs. Cash cattle last week was, I think, $7 higher week over week. And so it's the same old story there. Now, I'd tell you, I know we've talked about this. Seems like for 2 years, it seems like a broken record almost. But we're past that normal demand peak. Starting to hear some chatter kind of in the, the meat side of the industry that we've got some overhang out here. We've got some issues of, maybe some backlog of supplies here. And so that is the big missing link here is, can demand hold together? Our exports have been a little bit weaker here, and that's kind of been the trend. The consumer has held it together so far, but just keep in mind that the longer we stay at all-time high prices, the more that's eventually going to eat into demand. So not trying to be a bear on this thing. Things look good. They look friendly. But under the surface, too, talking about some rain, if you look at the moisture patterns of, like Kansas, Oklahoma, and even some of the northern plains area, they're getting healed up from a multi-year drought. And so grass, pasture, hay is going to be more abundant. There's some signs also that's, again, near-term bullish, the feeder cattle market, that we are starting to retain some heifers. And we're also helping build the herd on the dairy side, right? Bringing bulls out and crossing some of these dairy cattle with Angus. That's slowly going to change the numbers as well. So at the same time, we're talking about all this bullish news out here. Bubbling under the surface might be a slow rebuilding of the herd and some increasing numbers, and that doesn't happen overnight. But if you counter that with finally some demand destruction out here, one day we're going to wake up and find out, yes, it's still bullish out here, but we lost the demand because we've been at all-time high levels too long. So, just keep current. Don't get too bullish if you're out there on the cattle side. It's been a heck of a run. Usually these things don't end well. When they do end, and it will eventually. We know that, Casey, just based on the history of the way these markets move.
Yep. Let's jump over, talk about energy real quick, and then we'll wrap it up. When you're looking at the energy market right now, you see oil. We've talked about this for a long time. Oil companies like that $70 oil, it feels like, because that's where they want to keep it at, between 68 and 72. It feels like it bounces around there, and that's where we're at. Right now we're at 68 this morning, 68 and some change. Chip, as you're looking at that energy market, I really thought the whole geopolitical stuff we saw in Iran would really spike stuff. You've seen some spikes in natural gas and those kind of things a little bit, but nothing like I thought it was going to be like. As you're looking at oil, considering the geopolitical situation that we're in, what are your thoughts there?
Yeah, I'm 100% agreement. When I, was watching Fox News over the weekend a few weeks ago when we were sending missiles into Iran, I would have thought you're going to see $90, $100 crude oil, right? You didn't. You had a big spike, but it couldn't sustain anything over 80. Now, at the same time, what it may have produced is some, not windfall, but really good, profitable opportunities for these energy companies to get hedged up longer term. The energy futures markets trade out several years. I think at least 5 years out, you can trade crude oil. So some of these producers domestically here on the shale side, if they were quick on the trigger, they had some opportunities to hedge some profitable levels to kind of get restarted again. I think that longer term is good for what President Trump envisions here of the United States being self-sufficient again on energy. At the same time, now you're talking about some of these potential sanctions against Russia that might have some teeth in it as far as their crude oil exports go. And so that has kind of maybe put a little bit of a renewed, fear of going higher in crude oils. But to your point, I think it's pretty well balanced in here. And I think as you push, north of 70, you get, profitable and you get some hedging pressure in there. And as you get, back into the 60s, it kind of seems to support. So it's probably not a bad thing that we're kind of stable in here in the, $60 to $70 range. Not necessarily, going to see $2, gasoline with a 2 in front of it, but it seems like that seems where the fair price is for right now. And honestly, if we get under 50 or into the low 50s or below that, probably not good things happening in the world and domestic economy. So I don't know if we really want to root for, $2 gasoline, because it probably means the economy has had some really big hiccups at that point and something good's not going on in the gears of the world economy.
Yeah, price of oil is, you got to have a decent price of oil out there to keep. It's a good indicator of what's going on in the marketplace. Okay. All right, Chip, good stuff as usual. Folks want to reach out to you, get more information about what you're doing over at Blue Reef Agri-Marketing. What's the best way to do that?
Yeah, best way, probably 2 ways. You can call our office here, main office in Morton. It's 309-550-7213. We also have a new revamped, new and improved website. It's www.bluereef.ag, and you can get some information on our company there as well.
Right on. Well, Chip, appreciate you being on the podcast. We'll catch you again next time.
Hey, thanks a lot, Casey.
Right on. Hey, stay tuned for more Moving Iron podcast after these messages.
Well, there they are, mocking you.
See you next year, loser.
That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
Farm Journal is going to hold the first ever Yield Academy for 2025. It's going to happen August 21st in Rochester, Minnesota. Listen to this group. Real advice from folks who've walked out in the fields. Ken Ferry, David Hula, Randy Dowdy, and we will get some market outlook from Dan Bossi at Ag Resources as well. Get the latest on what's working in agronomy, equipment, and marketing today. And that is the last day of Crop Tour 2025. So stick around for the final meeting that night in Rochester. Just Google Farm Journal Yield Academy, and that will take you to the homepage for the event.
Hello, welcome back to Moving Iron Podcast. Got Aaron Finley here to talk about what's going on in the world of equipment. Aaron, how you doing, bud?
I'm very well, but then again, that's life on the high plains.
There you go.
No, I'm good. I'm good. As we'll get into here, the State of the Union is better than you might think.
Yeah.
You know?
Yeah, you look around and you see what's happening, and even though corn did have, I don't know what it has this morning, I have to look, but it did have a 3 in front of it, which I think perked some people up a little bit, but it sure didn't seem to slow a whole lot of ideas down. We're just a tick over 4 right now, it looks like. $4 a bushel, so front month corn anyway. And so it's
is that the cab corn?
Yes. No,
that's the front hopper in the Timpty, not the back hopper.
No, yeah, it's the almost old crop corn. Yeah. But anyway, you have things are kind of ticking along. They're pretty good. Like we've talked about, June, July timeframe kind of sets the tone for what happens for the rest of the year.
Right.
Good, positive so far as we watch things roll along. You're seeing some, we talk about this a lot. And if you've listened to this podcast over the last, 7 or 8 years, you've noticed that I talk about the auction market as the leading indicator of what happens in the overall marketplace. When the auction market starts to settle in, the retail space picks back up, and we're starting to see that happening. When the auction market starts to collapse, so does the retail marketplace. So it is it's the foundation, I think, of the marketplace. The best way to put it, as you're watching things take place and how things go around. Whatever happens to the auction market is a direct correlation with what happens to the rest of the place, and we're seeing stronger than normal over the last year over year, even year to date auction data that shows that, hey, things are starting to pick back up, things are looking better, things are moving along, and we feel like the market is starting to turn that corner. I've talked to a lot of guys out there that say, hey, we're seeing things move. It's nothing. Nobody's coming in with their arm and wiping out the shelf and dumping everything in the cart by any means, but they are absolutely looking at buying stuff and getting some stuff upgraded. When you're looking at the stuff that you're doing right now, Aaron, what are you seeing happening out there in the marketplace?
Okay, a term comes to mind from COVID, the new normal, right? Right, yeah. The new normal. And in my 2.5 decades selling machinery, I feel like we do one of these new normals every 3 to 5 years. And we talk about this a lot on here. We're in it. We are. 23 was the Chicken Little Skyfall. 24, get used to it. 25 is your settle in.
Right.
Settle in. Here's where we're at. And if you have the ability to, in the machinery business, to adjust for that, to truly settle into that, things are moving.
Yeah.
Now, it takes a lot of, it's just like we've said on here for the last 1.5 years, it takes a lot of creativity, especially, special programs and whatever you can do. Repaint the kid's pedal tractor, it's every little thing you can throw in the hat you got to do, but they're still moving. Yeah. Now, just to your point with the shopping spree, people aren't beating down the doors for $700,000 machines.
No,
but once there again, you get under that magical 4 number, the machinery under 4, the corn over 4. That's when life really clicks. Yeah. I mean, that's really, really kind of where it's at. Yeah. But as far as the overall State of the Union, I would dare say there's sunshine out there, just because for where the markets are at right now. the machinery is a far brighter spot than you would expect.
Right.
Big time. Maybe not big time, but quite a little so.
It's a big turn. I like to think of it like April in the Panhandle, right?
Yeah.
You have these beautiful days, but you're still going to have those days that the wind blows 60 miles.
Right now it's 75 and only like a 40 breeze.
Right. Yeah. So it's the sun's shining though, right? And that's where we're at. So I think that's where we're at. But I think you brought up a good point there, and I think the biggest catalyst that we'd have to look at right now is how used equipment comes back in on that 1 to 2 year old stuff, right? And I think that's the stuff that really, that's where the hangup's at, and a lot of that has to do with two things. One is the change coming out of COVID, coming out of COVID compared to what it was before COVID was there was a pretty simple formula that you followed, and you followed that formula, and it kicked out. And as long as you're within the spectrum, typically your 1 to 2 year old stuff sold pretty well, right?
Right. Exactly.
Well, that kind of got flipped on its head because you saw 60% price increases. You went from a $300,000 something to a $450,000 something, or a $500,000 something, or even $600,000 or $700,000, $800,000 stuff. The thing is, you have to get the used buyer back into the game, right? You have to have them come back into the game, and I think that's the hard part when you're at a certain point. If you have it, there's the person that bought the new one for $450,000, right?
Right.
Is the same person that's going to buy it for $350,000, right? And that's the situation that you run into.
That's exactly right.
So you have to that gap widened, and I think that was the biggest kind of kick in the teeth that as dealerships had to get used to, was that how that gap widened in the price of equipment. I think that's the thing, and it came out of nowhere, right? I mean, it's just one of those things that just like we'll do the same thing we've always done, and never really put much thought to it, and blah blah blah. And next thing you know, like, oh crap! Well, when you have this huge swing in price, and then you have a big event in the marketplace that creates abnormally high depreciation. Oh, and by the way, we're going to throw 6.5% interest on top of that. Holy crap! You have kind of a big fire out there. You have to go figure out you haven't quite figured out how to put out yet. And I think that's something that we're working through at the dealership side. Guys are working through that, and you're coming to the realization of what it looks like. But I think moving forward, kind of you're talking about what that new normal looks like. I don't see a path forward where trade cycles don't extend a little bit more than what we've seen and what we've seen normally in the past.
Just given, you're exactly right, and I feel like that will be extremely pushed by dealers just in order to get the second round down where it has to be. Yeah. Because the machines on that front wave are so expensive for the used buyer that there's just a giant gap. The other thing that we've talked about plenty that made it so bad is, I know here we had 3 trades from guys, bam, bam, bam. Like within 6 months, you had all 3 years of rigs right here.
Yeah.
Best of luck to you.
Well, and that was the other thing too.
Hey.
Yeah, that's the other thing about the marketplace too. That really made this a thing. If it would have been like a normal situation where, hey, we got 1 year's worth of trades coming in, and that's all we have to figure it this way out. And then the second year's worth of trades, we've kind of corrected the problems we made the first year's trade. Dude, you had 2.5 to 3 years, depending on how you want to do the math, 2.5 to 3 years worth of trading to show up in
6 months.
Not even a year, 6 months, 9 months, all that stuff showed up, which then, totally put the market on its head. And now we're looking at, again, the new normal, what this kind of, how does all these pieces come back together again? And I think that's what we're starting to see now, is that you've got spectrums where it's just that gap is wide, and you have a long jump across that canyon to make that work.
Right. Well, another, it'd be interesting to hop in the DeLorean and go back to 21, where only one of the two things happens. Either there's the price increases and no delays, or delays and not the jumps,
Right.
And the pricing. How would that have played out different?
Yeah.
I think either one of those would have sped up this, would have brought the entrance of new normal ahead 9 months at least.
Yeah.
Because the beauty of when that all started, everybody's lots were empty.
Sure.
I
Yeah.
mean, we went from we got nothing to sell to, oh man, now what?
Yeah. Now we have a lot to sell. Yeah.
You do now.
Yeah.
So
and I think,
it was such a, and it was just, it felt that quick.
Yeah.
You know, nothing, bam. Oh, we have, how do we have this many? Is that a misprint?
Yeah. And I think one other thing too, I mean, I'm really wanting to see, because this business, and I think every business the same way, but history just repeats itself at a rapid pace here, right?
Yes.
But the last time we saw something like this happen, right, we were coming out of the Great Recession, 2008, 2009, 2010, those time frame. The factories contracted a lot and pulled way back on what was going on. And you look at basically from 2010 through 2013, you had it's a huge ramp up and
Right.
equipment that was bought, all that kind of stuff. But between 2008 through 2009, and then the 2010 order writing period, right? That would have been like 2010 deliveries.
Sure.
You saw the amount of new equipment that got produced was very low, which then opened the door to that late model low hours stuff that really, if you were looking for something to buy, then this was kind of your option.
Right.
And we saw, back then we were seeing 8Rs and well, really, I mean, about everything.
That was the beginning of the used 8R.
That was, and you start looking around at all the other the Magnums and stuff like that. The amount of appreciation that we saw in that, we were giving guys back 125% of what they paid for it, on trade, and it had hours and stuff on it, normal use hours on those kind of things, because that was what was available to sell, and we had people out ready.
Right. Now,
I don't think we're going to go back through 125% of what it sold just because where the marketplace is at. Because back then, the market wasn't as nearly as saturated as right now. Right?
No, not at all.
Because you got to think about the early 2000s. I mean, you came out of the .com bubble thing, and that was a big thing. So when that 2008 hit, the housing crisis hit, the equipment marketplace had just kind of started. 2006, 2007, 2008, which is kind of one of those periods of time where the market kind of got back to whatever, quote unquote, the new normal was. Then you had a huge contraction based around an economic thing that happened, which then shut down factories, which then led to, hey, we've got a limited supply of used equipment. They got a lot of people want to buy. That's why the 2011 order writing period for delivery of 2011 was off the charts. I mean, remember, we had just planters coming in left and right. We had tractors, everything was just,
yeah.
It was, crazy.
Yep. 97 70s and 8345 hours.
That's right. You had that going. And then you had, as you looked at the marketplace and as things came together and started coming through, you started seeing that level back out. And then the new price took off. And then we went through 13, 14, 15, 16, all that stuff again. But looking at it right now, it's a similar situation where the factories have pulled back so much that when it does turn, you're looking at 12 to 18 months before they can really get things ginning back again. Go back and look at that. They shut factories down in 2008, and it wasn't until 2009, 2010 that they really got back full swing production, because 2011 was the biggest when things really got delivered, right? So similar thing happens here. You could see some of this pressure get alleviated. There could be a 2-year window in there where a lot of this stuff has the opportunity to come off the shelf because of how the factories get caught back up and those kind of things take place. You can see some of that happen. So I don't know. I think if you look at how history repeats itself, it's a 3-year party with a 3-year cleanup session, and then you got about a 3-year new normal on the backside of that. So it's like a 10-year cycle that you kind of have to go through that kind of puts you in a good spot. But I feel like we're on the backside of the bad, and we're into the quote unquote, new normal, and how that kind of bounces along. I think there could be some opportunity to see used equipment move in 26 and 27 based on the lack of ability to get stuff from the factory as quickly as I think you can get. I don't think it's going to be like just unless we get $6 corn or something like that. But I mean, it's not going to be going like gangbusters. But even then, I have to kind of sit back and think about if we do get $6 corn again, does that change the landscape of how much new equipment gets bought? Because I don't think it does. I think there's going to be a lot more people looking at used, late model, low-wired used stuff than some of that new stuff out there.
I mean, it really shouldn't, because $6 corn's the new $4 corn. So,
right. We start looking at cost of production.
A 4 now actually feels like a 2. So,
right. Yeah,
it don't go real far.
We used to get excited about $4 corn, and now you're like,
oh yeah,
that's $4 again. So
yeah, used to be corn's $4.50. Hey, go see that guy. I bet you close it today.
Yeah.
Now it's, hey, corn's $4.50. Go see that guy and congratulate him. He'll be here next year.
I know. That's crazy.
Man.
Cost of production.
But, if you're bored, you're not doing it right. So you got to look at it that way.
That's right.
Another thing, kind of to your point there, Casey, I remember when I started in 99, there was guys that were just, it was really bad. It was really, really gross back then. And you had, which I laugh about, very rarely did I ever look at the price of corn. It was, what's the LDP today?
Right.
Because what the LDP is doing is that's going to be your trigger sign on getting something moved.
Yeah.
Because the price was just awful for 5 years, and nothing you can do about it. And then about 03, things start turning a little bit. And then in 04 is kind of the start of every town that has 50 people is going to have its own ethanol plant.
Yeah. I remember that. I remember that. Yeah.
And that going berserk. Well, then we start see corn going crazy. And now, okay, here we go.
Yep.
And then when it settled back down, it didn't settle all the way back down. It only went about a third of the way, stayed. And that, about 04, 05, that was kind of the first step on that concrete block of steps.
Yeah.
That got us to 12.
Yep.
Right.
Yep.
Then we absolutely fell in the creek behind the house, climbed back out. And then we had this, it was like standing on, climb up Chimney Rock and then back down Chimney Rock. That'd be 2020.
Yeah.
And that's just where we're at.
Yeah.
So within the cycles, they're shaped way different too.
Oh, sure.
Look at your 70s boom. That was like an entire up decade followed by an entire down decade.
Yeah.
Now we're dealing with 3-year up and down.
They're sharper. They're a lot sharper now, and they're a lot. I mean, they're sharper. Very little gradual. It's wake up one day and what happened? Yeah, and it's a sharper and more compressed time frame than it's been.
Do you think it's because the world is more in tune with the whole world itself, so we know everything right away?
I think that has something to do with it.
It's so reactionary nowadays.
That and the internet's made it. I mean, think about it. Think about when your dad
That's how we know that was a given. That's how we know what's happening.
Back when your dad was farming, his whole world was 100 miles of desolate Nebraska, right?
No, we got the High Plains Journal, so we're familiar with all the way down to Wichita.
But
Dodge City, we knew a lot about happening in Dodge City and Garden.
High Plains Journal. I forgot about that one. They had a but you think about the dealerships that are around there, that was kind of what you did, right? That was kind of, what I mean? That was whatever was going on there was kind of what was setting the tone for your immediate area. Yep. And nobody really thought past that. Well, now, man, you just get on the internet, type it in, and you know what's going on in Canadian provinces and the Atlantic, Mid-Atlantic, and everywhere else, and you can see all these different.
South Sudan.
Well, yeah, you could, yeah. But you've got all these different options out there now to where you can take a look at that, and then we start looking at trucking costs. Trucking costs are for real now. I mean, there's no doubt about it. But when you're putting $5,000 or $6,000 on top of $400,000, $500,000, $600,000, that doesn't feel the same as it does when it was $90,000, right?
Right.
And I think that's how come the world, I think, has contracted a little bit to where we see the speed of which things change is it's more whole. I mean, it's just like one giant lot now instead of a bunch of little microcosms, right? Yeah, these little, because now you don't see what you see happening in what equipment trends obviously are based around what the crops are doing in that area, right?
Right.
Yeah, but it's more widespread, right? So what's happening in South Georgia isn't isolated to South Georgia, right? All of Georgia is going to feel the same thing, right? All of Nebraska is going to feel the same thing when it comes to an equipment trend, right? Not just Nebraska though, but from West Texas all the way through the Dakotas, you're going to feel that same equipment trend.
Yeah.
You know what I mean? So, once that trend sets in,
it's not your county now; it's your region.
It's your region, and those regions now starting to get blurred lines where even those regions don't necessarily feel the same as individually the same. You start seeing this broader spectrum. So, if you're just working in the Corn Belt, whatever trend you see happen in Iowa or Illinois or Indiana, Ohio, wherever you're at, is probably the same trend that you're going to feel in Western Nebraska when you start looking at how those equipment trends play together, because I can go out and look at what equipment's being valued for in one of the I states and how things are being valued in Nebraska, and it's going to be relative the same thing, because specs do play a big role in what that looks like. If you're looking at wheat, it's probably a good example of that, where you've got spreader machines versus chopper machines and all the stuff that comes in and play there. But when you're looking at just corn and soybean machines, I mean, as long as it's got powerful bins and may or may not need 4-wheel drive and those kind of things, but there's a handful of specs that make a difference, and it's not as widespread as what you would see maybe in another crop situation. So that levels that playing field out across that entire region.
Because it's a national market. God bless the internet. That is why.
Yeah, exactly.
So
40, 50 years ago, it was a very, very, very small regional marketplace.
In 1985, a dealer in Scottsbluff, Nebraska gave very little care about what was going on in Illinois.
Right. They didn't care what was going on
today.
Right?
Today, they care as much as at home.
Yeah. Yep. I mean,
there's just as good a chance that S780's going there as home.
Yeah. And now, I mean, to your point, I mean, just Scottsbluff, Nebraska is a good point. I mean, they didn't really care what was going on in Kearney or Grand Island.
Yeah. Well, I mean, that's a very unique spot to pick. You're right. They didn't care what's going on in Gering.
They definitely don't in Scottsbluff. But
Valley.
But it was one of those things where the dynamics of the marketplace really drove what was happening. Now those marketplaces are so much bigger now.
Right.
Everybody has a bigger, and it's easier to tell what's on the marketplace too. Right.
Oh,
yeah. Go back to 1985 and tell me how many combines are on the market. Used combines on the market. You had to really, it took a long time to figure that out.
There'd be a lot of counting line items in newspapers.
Now I just go to your whatever website you want to pick and look at, and you just hit combines, and it shows you how many combines are out.
Back to the journal. That'd be a good place to start, because the whole back half of that was ads and it was line item.
But you had to go through each one of those. Okay, one.
Oh, yeah.
And count them manually.
For real.
So now today's marketplace, you can do that within just a few seconds and see what the whole market looks like. So
as a young lad, I used to pull up Greensburg Tractor's ad in the High Plains Journal, because it was a page.
Mm-hmm.
And you're like, wow.
Yep.
Fast forward 30 years to a used equipment guy. Ugh.
Exactly. Yeah.
It's a very different feeling.
Very different feeling for sure. All right. Probably a good place to stop, Aaron. If you want to people want to come visit you at your CEO job at High Plains Wholesale, what's the easiest way to do that?
Okay, well, you can look up High Plains Wholesale is on Facebook and on TikTok. And I believe that's it for High Plains Wholesale. Those same specials I share on Facebook under Aaron Fentel and on my Twitter under Aaron Fentel. So either by my name or High Plains Wholesale on any social media platform, you should be able to find me, and let's talk about some iron.
Right on. Well, Aaron, I appreciate you being on the podcast. You can find me Facebook, Twitter, Instagram and TikTok. And you can find me there at Moving Iron LLC or Moving Iron Podcast, either one. And you can see the video version of this over at the Harm Journal YouTube channel. You can also watch or listen to the audio version on AgWeb, and you can see that there. I want to thank Greg Peterson for being on, Aaron Fennell, and Chip Nellinger for being on this week and talking about what's happening in the marketplace. So with that, I'm Casey Seymour. Let's go do some iron, folks. Out.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.